The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the July 20th. Terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. We do not make that one little 2x4 shift. It means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. And more importantly, I'm here to serve you. So feel free to pick up that phone. Dial on in 877-927-6648. Of course, internationally, 727-445-1044. If you can't get to the phone, you can always send me an email, steve@tfnn.com. Inside that subject heading, just put radio show question, and I'll get to it. Of course, inside the Tiger's Den, any ping will do. So let's go ahead and get this show started on Terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading down 15 points. She's trading out of 21.625. S&P is up a point and a half at 24.75. NDX 100 up 2 points. The Russell 2000 up 1. So a flat market. Semiconductor index is totally flat. Trading out 11.13. Gold is up $4, silver 7 pennies, light sweet crude back 29 cents. Leading the charge here to the upside, it is Regeneron Pharmaceuticals up $14, nearly 3%. Priceline up $13. Avista Corp up $8.70. Sarepta Therapeutics up 25%, $8.50. AutoZone in the green zone up $7.50. Wabco Holdings up $6. To the downside, it is Alliance Data System. ADS is a ticker symbol off $23, nearly 9%. Chipotle down almost $13, another 3.5%. Checkpoint Software off $8. Pool Corporation down $9. Snap-on down $7.40. Sherwin-Williams painting the town red off $6.70. Let's go to we had some questions that came in. A question that came in late yesterday. Didn't see it until after the show, and then I have one from a subscriber that came in about a half an hour ago. So let's go to that first with the flat market out here. I'll read you the question verbatim, and then you'll know that will kind of put me in the frame of mind to answer the question verbatim. So it's from Larry. Larry says, "Hi, Steve." Hi, Larry. I wanted to throw this out to you. As you pointed out in today's newsletter, all things are bullish for the QQQ series ETF. Also, this is still only in leg A up in the daily chart, according to the Chapman wave. So unless this turns into an Eiffel Tower setup, straight up and straight down, which is highly unlikely given the bullish patterns in the slow stochastics and MACD. So Larry is clearly a Chapman wave aficionado out there. We more than likely should get legs B, C, and D yet in the Qs, and I'm assuming he's referring to the daily chart out there. How concerned are you that we may get a 1 or 2 day quick spike down to take out our stops, then continue right back up into those next 3 legs like we have seen all too frequently in the past year? I'm leaning toward adding to my position on the next dip. Am I foolish? Well, first, the answer to that question is absolutely not foolish at all. Thanks, Larry from Detroit. So let's try to pick that apart. Now, first, what Larry is referring to inside the newsletter, when the markets get like this. So just let me kind of share with you my logic out here. And we'll take a look at this chart. And some of these charts you're going to see are charts that are inside the newsletter. I typically don't show those too often during the show, just to keep things separate, but to answer a question. And Larry asked if he said I could do this on the show if it was easier, which it is, versus trying to respond to that email since it came in half an hour ago. So when I start seeing charts like these are the 4 equity futures contracts. You know how much we enjoy looking at these charts out here because this is really all about price discovery, and we are in the process of discovering price. So when I see the ES Mini, that's the top panel chart, S&P 500 futures contract in essence. When I see that moving higher with less relative energy, that's the black diagonal line that gets drawn on my chart, I start to get a little bit concerned, because I know that is a potential topping pattern. That's why Larry can say, am I concerned that we might get a 1 or 2 day quick spike to the downside? And so the answer is I am concerned about that until this pattern goes away. Now, the pattern being present doesn't mean diddly. You know that. It doesn't mean anything until we see a bearish reversal signal, and you need to see it close below Stevie's red line out there. We don't have that. The NQ, which is the trade that we're in, we don't see that pattern whatsoever. We got in that trade on July the 5th, all the way down here towards the bottom of the market out there. That was an easy trade. That was a simple trade. You and I have gone through that many times, right? That was nothing more than a Gartley buy pattern. And if you study H.M. Gartley and then you don't take the trades when they're present, you got to ask yourself why. The Dow equity futures contract, now that did give us a confirming sell type signal a couple days ago when it formed that evening star, and price did close right below Stevie's red line. So that's that price relative strength divergence pattern. Gave us a confirmation. However, I always like to see a confirming follow through on the very next trading session. We did not get that yesterday. So that signal is present but sort of weak out there. Russell too. So everything here still looks bullish. That is, and Larry is exactly correct. Everything is very bullish looking on the chart out here. So what I do when I start to get a little concerned about some type of pullback, because yes, I too would like to add on the pullback out there. So Larry, not foolish at all. It's a matter of trying to figure out where that spot might be. Now look, on this chart here, the spot's very easy to identify, and that would be at Stevie's red line on a daily basis. That'd be 58.31. That'd be a fairly decent pullback. Many people at that stage would think, that's the beginning of the bear market. That would be an inaccurate conclusion, of course, in my opinion. Now, so when I start to get a little bit concerned, and because there's all different types of traders, and I covered this yesterday, when we started noticing these patterns, all I started doing was adjusting our stop. So in the daily newsletter, as an example here, you'll see up at the top, first what I do in this newsletter, if you've never seen it or maybe you tested a long time ago, I put together the overall market outlook for the S&P, for gold, and for bonds. Now, this is in here to assist newsletter subscribers with managing their intermediate or long-term accounts out there. If you take a look at most portfolios, there's some mix between equities, bonds, and typically commodity. And equities can be emerging markets and so forth. I just kind of try to break this down. Now, these are the same signals that I have been providing to the folks at Timers Digest. We began that in March. And I shared with you their feedback when they ran my results against everybody else for that time period, which I was in number 1, number 3, and number 3 position across the board and all that. We'll come back, take a look at the adjusted stops, why we're doing what we're doing, and try to answer Larry's question. This is Rhodes with TFNN. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. David White has just announced a new online course that he'll be premiering to his subscribers the evening of July 26th, The Next Wild Wild West of Computing. Machine learning will be the biggest growth area for tech companies in the next 10 years. Make sure you're ready to capitalize on that opportunity. With over 50 types of algorithms and growing, Dave White will tell you why there are so many areas for companies to apply this to their business to both sell and consume. Right now, you can get a 30-day free trial to either of Dave's newsletters, Path of Least Resistance and The Technology Insider, as well as get a 30-day money-back guarantee when ordering Timing the Trade Charts. Don't miss out on the next Wild Wild West of computing as it premieres July 26th for all subscribers to Dave White Services. For all the details and to sign up today, visit the front page of TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So I know this is kind of a long, serendipitous route, but just trying to answer a subscriber question out here. So you can see that the action I started taking yesterday was to adjust our stops inside our long NDX 100 trade, as well as our long gold and gold mining trades out there. So, and the question is, how do I adjust those stops? It's really pretty simple. If you take a look at here's our current positions out here. So, and when I send out a trade alert to folks, I give them the 1-time, 2-time, 3-time ETF, and I'll share with you actually the differences or lack thereof inside those. But at the bottom, what you'll see is the actual average true range over the last 10 days out here. So $1.55 on the Qs last evening, $1.29 QLD, TQQQ 337 out there. And all I do is I take those average true range, multiply them times 1.618. That becomes our stop, and I subtract that from the actual close of the day's session out there. And a 1.618 stop should be rather wide in an environment where we're having nice moves to the upside. Well, no matter how small, I mean, a nice move off of the bottom like we have had out there. And my thoughts, Larry, are even if price pulls back and were to take us out, we wouldn't flinch to get back in. But we shouldn't really see that. I'm thinking we should not see that inside, especially inside the QQQ series. We shouldn't. Doesn't mean we won't. And, you know, I may be dumb, but I'm not stupid. And so, therefore, my primary responsibility is to get us in at the right time on a trade and to certainly protect our profits out here. We keep adjusting the target exit. This target exit here is not really my real exit on the trade out here. And so the question becomes, and today was a great example of where we should have seen the market actually pull back. And this just actually adds to the whole strength idea of what's going on inside, specifically inside the NASDAQ out here. And when I say that, here, I'll show you two charts, because all this was happening simultaneously. And I actually intraday did trade the ES Mini to the short side just for a small period of time. Took several points that was offered to me and ended up getting out of the trade. And that was because of this seventh wave move off of the bottom back here on July the 18th. You simply do, and Larry had mentioned the Chapman wave counts. You know we love that seventh wave move. We especially love it when prices moving higher, doing less relative energy, and then the bears show up. Then you get a bearish reversal signal. And that is exactly what occurred inside the ES Mini. At the same time that was happening, the NQ, the YM, the TF were doing the same thing. They weren't in wave number 7, but they were moving higher, less relative energy. A little shooting star out here at 9:30 this morning. Some additional follow through. And so, that got me in the trade and said, okay, even in the den I was posting where price should pull back to, and it got to the first level out there. Now, that first level that I was looking for was really on the 60-minute time frame, so I'll switch over to that chart out here. And this is, Larry, what I'm going to do, because I did not do it in today's newsletter, is I will make sure that each day this chart right here is included in newsletter, because you will see now typically, actually what I'll do is I'll make sure it's done like this. So you'll have a 30-minute, you'll have a 60-minute, the 240, the daily, and the weekly. And what it's going to provide at that stage, when I send that out, this morning's newsletter went out about 6 o'clock or so, 6:15, you will have the current profiles. And if you take a look at the 240-minute profile, this was really my target, one of my targets, 58.95. Folks in the den can go back and see that exact posting. Now, at 58.95, the 60-minute also had a profile at that time, and I said that's going to be or should be a strong support level. And if it falls below that, which is what I was anticipating because of all of the other signals we had in the short-term charts, and 57.96 would be open. But it was just 58.95. The problem is that, and here are the TAS market breadth data. If we put these up on the screen, this is just extraordinary information. It's great to have, especially when you're trading intraday, just to understand what is happening amongst the stocks, the top 108 stocks inside the NASDAQ 100. And even though this won't show it necessarily, I can show you what I was looking for. I wasn't seeing, I really sort of can show you. When we got to that time period of about, say, 10:30, I'm trying to get it in here, 10:30. I want you to notice where right now it says 11 o'clock, shows July 20th, shows 58% and 14%. 58% of the stocks being above market profiles, that's bullish, and 14 below. And that wasn't budging. So price was coming back to support on a 60-minute chart. I know I showed you the 30-minute chart. Here we had the 60-minute, and price was coming right down here. And I wasn't seeing a budge. It was just telling me, that's when I totally tightened up my stop on the ES Mini. And now you wouldn't have that information out there for you, Larry, but you would have logical places where you would look to add to that trade and go with a wide stop, because you have reached a conclusion, perhaps some because of me, and I agree with your conclusion out here, that that the Qs are going to go much, much higher. So there's not anything that's changed there. And now it's all a matter of trying to figure out in the so-called vertical market, how do you trade it and where is it that you buy? And these profiles on a little bit longer term basis, I think are very helpful. So today would have been, one of those. And with regard to the adjusted stops that I have in there, if you're a more aggressive trader, all that you don't want to do is let a winning trade turn into a losing trade. Look, we got in these trades July 5th out here, July 11th when it came to the gold positions out here. And you've got nice returns. When I really look at returns, I'm looking at risk reward. Here we're above 2 to 1 on those, and it's a bit higher as we speak right now. Here's the interesting thing. Here's what I really want to show you with regard to doubles, triples, and singles out there. Doesn't matter which of those trades you actually take out there. And the answer is, if you simply use the same risk on each trade, the answer is no. It doesn't matter one single iota. Now, what I mean by that is simply that when we enter a trade, we know what our average true range is. And what we do is we take a risk of, say, 1%. See, I've got this risk column out here, shows 1%. It's 1% of your working capital. Every trade that I issue is based on $10,000 increments. That way it makes it easy to figure out how many shares one should purchase. And then all you are doing is taking that risk, which is $100, right? $100 risk and dividing it by your average true range out there. Really, it's your average true range times a multiple. I like to use that 1.618 expansion. And that tells you exactly how many shares to buy. So even though this shows a different percentage gain out here, when you take a look at the real dollars, look at the reward risk, it is exactly the same. It means that if you were to multiply the actual per share profit by the number of shares, you're going to come out to about the same dollar amount out here. Now, the beauty of the triples when you do it like this is you actually need less working capital, in this case here, because the TQQQ was selling at $95 versus the Qs at 136. You can trade any of these vehicles, and the triples are just fine when you use the proper position sizing. Then you have more money for your other trades. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Back, folks. Dow off about 19 points. So let's go to a couple of the other questions. First, Tony from Battle Creek. Hey, out near Kalamazoo, I would believe, right? When you get a chance, Steve, big pop today in Verizon VC. I was going to go along at 43. Is it too late? So let's take a look at Verizon. Now we've got a blank chart out here right now, and you can see the wide-ranging bar, big pop, so to speak, that Tony is taking a look at. And what we know here, we'll go ahead and add volume and some of the other tools and indicators out here just to assist with this. But what we do know at this stage is that we're watching to see what Verizon does at its last sign of weakness. Its last sign of weakness was this gap or breakdown. Right, this gap to the downside on July 6th. 44.44 is a very key level, Tony. If this can close above it, then in fact old resistance may become new support. If it doesn't close above 44.44, and it's trading 1 penny below that right now, let's go ahead and add volume. Let's see what the volume characteristic looks like on this. There we go. And you've got volume about 9.8 million shares. That's going into this gap to the downside of 15 million shares. I don't have my other spreadsheet up to know if that math is good or not. You can do the exercise of take 9.8 million shares divided by what, 4 at this stage, multiply times 6.5 to figure out the estimated volume, or you just wait to the end of the day out here. So if it's not able to bust it up through there, then the answer is no, it most certainly is not too late to buy a pullback potentially, right? So you'd want to see how would this thing pull back. But let's go at our profiles. Let's look at our daily profiles out here. That looks a little bit bullish. The pullback here, you would say, would be 43.71 if you were going to get one. Weekly profiles say it's not out of the woods. Actually needs to see it close above 44.68 to get back in what we'll call the profile range out here. So at this stage, I would say now I would sit back and perhaps wait. I don't on Verizon necessarily have any kind of a major type bottoming-ish type signal out here. If it's able to get through that gap, the 46.50-ish type range is a target. You've got 47.03 as the top of the weekly box out there. Getting above that would be a very bullish. So this could be counter trend rally. It could be more than that. I wish I had some other signal out here for you that said that, hey, this is like a major bottom. But at this stage here, the proper trade as of 1:33 is to wait to see if it closes above 44.44. And if it doesn't, then go ahead. You were talking about 43.71, 43.26, 43.03. Those would be your numbers, assuming that it's pulling back on some light volume out there. So thanks for writing. Thanks for listening. We have Adi wanted to take a look at two equities here, SSYS, and she was looking at this equity, as a intermediate or long-term type holdout here. This is the Stratasys, right? This is the 3D company out here. And so if we're looking for a great place to get in on this, you might actually be there. The reason, Adi, that I would say that on Stratasys is the following. One, just simply based on our TAS market profiles, the green lines, which are the weekly, you can see that this is the center of the box closer to the bottom. This says that this is a bullish structure of the box as long as price is above 23.15. The actual low today was 23.20. So as long as it holds this area, you're in good shape. Now, the reality is, I would have to expand out beyond profiles. I would have to say the real level that this needs to hold, the ideal area to buy this would be 21.40 to 22.10. I don't know if you will get there. Sometimes you come back into you don't know whether, and that's the breakout. Right, breakout with nice volume out here. You've got a nice high volume high that has not been tested in Stratasys. This is May 16th. This is for everybody that's out there that trades individual stocks. And if you're looking at the 3D companies out here, this is giving you a nice signal. Now, the issue here that you've got to deal with, I'll get rid of the market profiles, you just need to also understand where there's some resistance that is overhead and then do the reward risk. And that resistance is right here at that gap, right? That resistance is about the 27.54 level. But you got 23 to 27. That might be, if intermediate term. Let's put this on a weekly chart time frame. Let's go see what's going on weekly. So on weekly, here, look at the weekly chart out here. Here is a breakaway du jour from the week that began February 29, 2016. 15 million shares to the upside. out here. So this, and when I say this area, we're talking the 1870-ish type area. You did get a test on a weekly basis of the February 8th swing point. That at 5.2 million shares was tested with 3.4. All the testing to the downside may be done at this stage out here. If you want to know the best entry points, it's still going to be 2140, 2210. I don't know if you're going to get that, Adi. Use a wider stop. It's an intermediate term trade. Figure out your risk, 1%. Make it as large a stop as you want. When you have that dollar figure, use that to divide by your risk amount, and that's how many shares you buy. It is really that simple out there. Folks, if you do that for the doubles, the triples, and the singles, you don't have to worry about which one it is you're buying. On the triples, just as an example, so for clients that bought these singles, which I did, by the way, in my long-term retirement account, so I don't just issue trades, I take these trades too. I actually have the QQQ series exposure, but to do both the Qs and then the trade in gold and the trade in the GDX on a 10,000 account really took $10,239. On the triples, it only required an outlay of $7,086. You still get the same profit return. Percentage returns, I'm not going to get too caught up. They actually mean diddly, right? One is up 16%. So what? It's how many dollars in profit, right? It's how many dollars in profit, and then what kind of return are you actually getting on that portfolio? It's not about the percentage thing, and there is nothing more important than position sizing. And if you don't know what position size is, you can go buy several books on it. You can sign up for my newsletter. I think there's still a workshop you get, a money management workshop. That'll teach you about position sizing. I just sort of did teach you about position size, and we went through how to go ahead and do it. And if you can get your head wrapped around position sizing for your portfolio, you're going to always be in good shape out here, always be in good shape. You can always get all that money put to use out there. Okay, so it was Stratasys, and it was KRE was the other ticker symbol that Adi was interested in. That's the regional banking ETF out here. Now, in this case, you're looking for a longer-term trade, and all this has really done is just move sideways. And this is a weekly chart, by the way, that we are looking at. Now, its breakout, you can see this. It's clear as a bell. That is from November 7th. That's 70 million shares to the upside. And so that really becomes, your ideal-ish type area. Here, the following week was also very nice, volume-wise, 62 million shares. You can see that's where price pulled back to. So, Adi, on a long-term basis, if you can see the KRE pull back into 5166 type area, do it less than 38 million shares, I say fire away. I don't know how far you're going to get on this initially, $59, but that would be your intermediate term buy in the KRE. Happens at the bottom of the box is at 51.59. So there you go. Steve Rhodes with TFNN. We'll be right back.
Trading is different than investing, but the opportunity to take advantage of short-term trends is only one if you get the direction right. Direction leveraged and inverse ETFs offer bold trades on U.S. and international stocks and bonds. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Now, I don't know if any of you are golfers out there and you're watching the Open, the British Open out here. It's been on since 1:30. So for those of you that are light sleepers like me, it's great. You know, there's nothing like getting up early in the morning and watching a little golf, doing your workout, come back, do some work out there. And that's why subscribers got the newsletter at 6 o'clock this morning. In any event, hey, it's very great. It's cool weather. The Americans are doing really well on the leaderboard today, but they've got beautiful weather. Beautiful weather in Scotland right now. Is probably like 70 degrees out and just a mild wind. I don't know, 15 miles an hour or something like that. But tomorrow should be really fun to watch. These guys are going to be playing in 55-ish, 55, 60-degree weather, 90% chance of rain, 90% chance that it's going to be sideways rain out there because the wind's blowing at like 25 miles per hour. I don't know what the gusts are, and so that should be basically and they don't have lightning over there for the most part. They just simply have rain. So they're going to be playing in it, and it should be interesting to see. Not that I wish bad things upon good people. I don't control the weather. No more than I can control the markets out here. It should just be fun to watch out there. So get up early because it's going to be raining pretty much at 1:30 in the morning in East Coast time. And, you know, if you're over on the West Coast, you get to watch it before you go to bed. You can go to sleep to it. Now, another subscriber, Sean, writes in and says, referencing tightening stop. So you get indications that the annual cycle may come into play after tomorrow. Again, I'll just go to the newsletter. This is included in the newsletter, the expanded edition of my newsletter service out here. And what Sean's referring to here is the historical annual seasonal cycle. This just simply combines, in this case here, I've taken 85 years worth of data to understand what the Dow, this is all based upon the Dow, what the Dow on average does, when its turning points are. Now, sometimes for some reason, it actually happens to the day. I don't really use this in anticipation it's going to happen to the day. But like I said, you know, I may be dumb, but I'm not stupid. I recognize that it really could happen to the day. And what Sean's referring to is July 21st. That would be tomorrow, which under annual seasonal purposes would typically be what I would be targeting as the turn date out here. I don't have that signal whatsoever as we speak. We took a look at price moving higher, doing less relative energy in a couple of the equity futures contracts. But again, no signal. We get a signal, I say, well, this could be more than a coincidence and something that you have to pay attention to. The other side of this trade, now June 25th is where we should have seen a bottom. We saw a nice bottom July 4th, July 5th. July 3rd, July 5th out there, right? So that's certainly within a range out here. So this could be put off by a bit. I don't even know that this is going to be the normal cycle out here, where we see the market move into the bottoms in October out there. And many of you have been around where the sky was falling in October and we called the bottom, and people were like, how'd you do that? Really, it's understanding those cycle patterns and looking for other patterns that complete at the same or near the same time frame out here. This really could be the cycle that's in play, Sean. It's the chart on the next page, page 46 of today's expanded edition of the newsletter service. You see, in this case here, the presidential pattern says that the market, the Dow, would form a bottom July 7th, and ours is July 5th. And this says the market goes up through the end of August. I would have to say this pattern is as much in play as any other pattern that you and I have taken a look at out here. And that actually really coincides, and then we can stretch that a bit. See this October date out here? That's the presidential pattern. This one with me, we talked about this yesterday. Oh, I can do it like this. Slideshow from current slide. This is the real slide with regard to what happens in years ending in sevens out there. It is not July where you start to get concerned. It would be October. Now, again, it's just 12 decades. It's just 12 cycles that we look at versus 85 years worth of data out here versus 21 election cycles that we've had. But 21 election cycles where I've got good data for the Dow out here. So what we have to do, Sean, is we just simply have to resort to good old-fashioned patterns. And there is no better pattern, in my opinion. There is no better pattern. The most consistent pattern is with price moving higher or lower, doing less relative energy or less weakness out there to help us identify tops and bottoms. And so back to the old Dow out here. If the Dow is able to blow through, and at this stage here, it's back above Stevie's red line just slightly. It's suggesting to you and I that it wants to go attain higher price, and it may actually do it with energy and therefore negate that entire pattern. That's the Dow. The one that you and I, Sean, and our subscribers are most interested in, though, is the NDX 100. And as Larry pointed out, this is only in that first leg of the way up in the Chapman wave. And And the other nice thing is yesterday was a TD, time to market setup 9 count out here. And this number 9. The ninth count, that's where you have 9 consecutive closes above the each close above the bar, 4 bars. Really, I don't want to have to totally explain it all for you out here, but we did have that yesterday. And when that bar is not anywhere near bars 5 and 6, it just tells you it is Mr. Momentum is in play out here. And this would need to close below 58.26.23 for us to even believe that that annual seasonal cycle, Sean, could be kicking in. If anything, what we have is an A to B equals CD to the upside inside of the NDX 100. And if we take a look at where that's going to take us to, that's the Gartley buy. I give you the minimum. I'm going to give you the conservative. When I say the minimum, I'm giving you the conservative A to B equals CD pattern out here. It's a doozy. This is the weekly chart we're looking at. Gets you back to 79.27. 77.64 out there. And that's exactly the reason why Larry's looking to be able to add to his position out here is simply because of knowing these patterns. Now, what are reasons that would even suggest that that's what's going to unfold out here? We talked about yesterday. I finally did find that chart, by the way. Here is the New York Stock Exchange, just looking at the advanced decline oscillator. Now, the reason we're looking at that is because what you and I know is that even today, inside the New York Stock Exchange, we're at another new all-time high in the advanced decline line. It's at 149 in the afternoon. Brand new all-time high. We are just within a hair on my chinny chin chin of the volume summation index getting to a new all-time high inside the New York Stock Exchange. Folks, you get both of those to confirm out here. You just tuck away. Just take the bear suit that you've got, send it off to Alaska, to someone you don't even know, and tell them they can't send it to you until Thanksgiving. That'd be the earliest. Let it arrive the day before Thanksgiving out here. You just get this type of confirming signal out here. We still might get pullbacks, but be like Larry, looking to add to the long position. And I'm not referring to you intraday traders out there, but that should be the thinking. These are the confirming messages we're getting from these charts that we are looking at out here. When they change, I'll absolutely share that with you. Now, what we'd like to see is we'd like to see the daily advanced decline oscillator reading get up above this 150 level. Because what typically happens when that occurs out here, the message is longer term, higher prices are coming at us. Steve Rhodes with TFNN. We'll be right back. We're going to go take a look at, for Tom, we're going to go look at his trades in Nugget and Junior Nugget, and to take a look at the end as
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Hey, before we go take a look at gold and the yen out here, I do want to alert you to a potential fairly significant trade out here, and that is in the euro-US dollar. So if you're watching this on Tiger TV, I can expand this up just a tad. What you'll see is, and this is a weekly chart that we're looking at. So it's all going to depend upon where the euro closes tomorrow. But what I can suggest to you is that if it closes over 116, 1.16163, and we're over it right now, what we have is a potential breakout of a fairly long-term box consolidation pattern. There is one other high that you'd like to see it clear for confirmation, the August 24th high. That's not a bearish reversal candle. Nonetheless, price did get up to the 117 area, 1.11714, but really the real signal would come with a close above 116.16 out here. And what I'm referring to is we have a nice little consolidation where we have the bearish wall set up from back here in May 2015, that little shooting star from May 2nd, 2016. And what this allows you and I to do out here is to create this nice little box rectangle consolidation out here. And the beauty of that is that when you break out of a consolidation, you have a price projection, you have a measured move. That measured move is equal to the consolidation, which then gives you and I a price target of around 128. Yeah, around 128. Last time that the euro was back in the 128 level was back in October of 2014. Now, the reason why I alert you to this, because this is going to be a trade one way or the other. Either price is going to go ahead and bust this to the upside, and then you're going to see a larger move inside the euro, or it's up against resistance. I don't know which one it is. If you're not in this trade, you shouldn't get into this trade just yet. Instead, what you want to do is get some type of confirmation. And since the euro is the one that controls the U.S. dollar index for the most part out here, this will be the signal as to which way the U.S. dollar actually wants to move. If there's a bust out to the upside, U.S. dollar index is going to head lower into the 86 type area out here. And if it can't bust it out, then the U.S. dollar index has found a bottom. I can tell you that commercial traders of U.S. dollar futures, if you take a look at the futures contracts that make up the U.S. dollar, not all currency pairs out here, they're actually anticipating the U.S. dollar to make a bottom. So that's kind of interesting here, knowing that we're up against resistance. I don't know which way this is going to break, but I can suggest to you that if we took a look at what the commercial traders and how they're positioning themselves, this should be about the extent of the move higher in the euro and the extent lower in the U.S. dollar. Regardless of that, you just simply break this pattern, and that's going to provide you and I with a whole lot of information out there. Tom, with regard to your trade in the Nugget, the J Nugget and everything, I'm in that trade, but, I trade it, and newsletter subscribers are trading it, in essence, differently than you are. We're in this thing here for the long haul right now. And that long haul only is going to change if we see some type of support break, some type of support fail. And this chart here, where you've got the gold contract up top, the yen right below that. In this case here, I've got the XAU covering the mining sector and silver below it. Everything is above Stevie's red line. And as long as price in all of these stay above Stevie's red line, I can only suggest to you that you stay with that trade out there. But again, I don't know where your entry. My entry is perhaps lower than where yours is at out here, but just buy the dips in. This looks like the real deal out here. And as far as the yen today, just a little doji. It's not providing you with any information. Folks, stay tuned. Your favorite polar bear in mind, David White, is up next. Have a terrific Thursday. Get up early. Watch the British Open. And I'll be with you on Fantastic Friday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.